Index funds are one of the most popular ways to start building a long-term investment portfolio. Let's break down how they actually work. An index is simply a list of stocks or bonds that track a specific part of the market, like the largest 500 American companies. Instead of buying one stock at a time, an index fund buys a tiny piece of every company inside that specific index. Investors like them because they offer instant diversification and typically have much lower fees compared to funds managed by professional stock pickers. The main difference is that index funds follow a preset list, while active funds rely on fund managers to buy and sell individual stocks. Lower fees are a major advantage. Even a small difference in expense ratios can impact your total returns significantly over several decades. John Bogle, the founder of Vanguard, famously said that by buying an index fund, you are buying the entire market instead of searching for winners. Index funds provide a simple path for long-term investors. Always review the prospectus before investing. Thanks for watching and see you next time.